But the talking point since last evening has been the layoffs announced at TCS. The entire sector facing the ramifications of it. TCS is trading lower today, and along with it are also stocks like Wipro and Infosys. Rima is here to summarize what does this mean for the entire sector as a whole. Rima.
Thanks so much for that. So the big question is, do the job cuts at TCS signal a big tech reset? Well, the news is that India's largest IT services firm, TCS, is letting go of 2% of its workforce. That is nearly 12,000 employees. And this is largely the mid to senior level, and it would be spread across FY26. Now, this is significant because TCS is the bellwether of India's $250 billion IT industry. Job losses at this scale are not just rare for TCS, they're unprecedented. So what is the key driver behind the job cuts? Well, it is a growing mismatch between demand and the available skills. TCS insists this is not about AI replacing jobs or the need to hire less. CEO K. Krithivasan told Money Control that this is not about AI giving you 20% more productivity gains. It is about skill mismatches and the feasibility of deployment. But that said, there has been a slowdown. There has been pressure on margins. And in an AI automation world, we need fewer people. Fewer managers will be needed. The mantra is basically you can do more with less. Now, global tech giants have already made very deep workforce cuts, and this has been happening for a while. Just this year, Microsoft has axed nearly 15,000 jobs in 2 rounds. IBM has reportedly let go of 8,000 employees as AI has replaced HR. But now what's happening is that the tech layoff wave is hitting closer home. TCS calls it as a part of a journey to become a future-ready organization. But the deeper shift is clear, that the traditional, people-led, a linear revenue model is now giving way to an outcome-based AI one, a platform one. And it hasn't happened overnight. Indian IT companies have been stealthily, quietly rebalancing their headcount for nearly 2 years. This is the picture over the last 2 years and how the headcount has changed. For TCS, it's lower by more than 2,000. For Infi, about 12,500. Wipro, in excess of 25,000. So the question is, what lies ahead? Will other IT companies also follow suit and optimize their workforce to become future ready? So do we have more job cuts coming for the entire sector? Will the industry continue to delay wage hikes? Remember, TCS hasn't given their wage hike as they normally do in April. And in the near term, say for a company like TCS, will this trigger a spike in attrition, or will it in any way impact the job delivery? So lots of questions. We'll have to see how this plays out. But this could just be the start of a deeper transformation in the Indian IT, the way it operates and survives in this age of AI.
Okay, all right. That's such an interesting data. And thank you so much for bringing that perspective as well, Rima, for that. In fact, we are joined by Ganesh Natarajan, who's the former CEO and MD at Zensar Tech and former NASSCOM chairman as well, and is currently the chairman at GTT Data and Solutions and Honeywell Automation. Also joining in is Girish Pai from Bob Capital Markets. Gentlemen, thank you so much for joining us. And this is such an important talking point now, right? Mr. Natarajan, let me start with you, because you've seen IT industry evolve over years. What are your thoughts on this? Do you think this is the beginning of a more aggressive headcount recalibration? We'll see more cuts across the industry now?
Let me give you a different perspective. If you look at the World Economic Forum's Future Jobs Report 2025, they talked about the structural labor reorientation. And that's what this is, in the sense that they talked about maybe 17 million jobs being created and 9 million jobs being made redundant or replaced. Even if you look at the IT sector, my own bet would be that 1 million jobs will become redundant, whether it's testing or documentation or programming, of course. But at the same time, new jobs will get created. So I tend to agree with the TCS narrative that this is a future-oriented restructuring, because in the days of generative AI, when you're using ChatGPT a little bit and helping yourself, that was fine. But this is the day of autonomous agentic AI, which means that 80% of the work could potentially be performed autonomously. So in that context, when you look at your organization top to middle to bottom, then you do a fundamental rethink. And I think every industry, it does not just IT, but definitely including IT, will do this reorientation. There will be some shedding of jobs. At the same time, they will be creating new jobs with new skills, which is exactly what the narrative that you talked about.
So, Ganesh, I think the question that a lot of people are asking now is that Indian IT company had the best talent. We're the land of engineers. We're flush with capital. Companies have billions of dollars. Could they not have anticipated and proactively dealt with this shift that is taking place? Could we not have realigned our business models in a different way that we don't come to this today?
See, we have to understand that things are happening at breakneck speed. In the sense, the word agentic AI, all of us heard probably less than a year ago. So in that sense, there was no question of long-term planning. And I think a lot more will play out. We are approaching artificial general intelligence, and AGI will make a fundamental shift. If at all we enter the era of super intelligence, it'll be even more game-changing. So I think we have to be prepared for a few years of churn, where you will find that organizations, we do a lot of consulting in GTD data solutions. We're telling people that, look, move from transitional AI to game-changing AI. No, game-changing AI means game-changing for the organization. So we have to be prepared for this future focus, and it's not going to stop here. It's going to take place over the next 2 to 3 years. So I think we should tighten your seatbelts and be prepared for lots of changes.
So you don't think we could have done anything differently, the Indian IT companies?
Well, 2020 hindsight is always there, but I'm saying people have done their bit. You talked about it in your own story. So, but I don't think anything fundamentally different could have been done. And this will evolve over a period of time.
Let's also bring in Girish Pai into this conversation. Girish, good morning. Thank you for joining in. Do you see this becoming a trend now at most of these Indian IT companies? I was reading a note earlier this morning which mentioned that companies that are failing to gain market share could end up resorting to such moves as TCS has embarked upon. Do you see this as a widespread trend emerging? Because if you look at the headcount reduction over the last 2 years, companies like Infosys and Wipro have already seen almost a 4 to 5 digit headcount reduction already.
Yeah, firstly, thanks for having me. So if you look at what the statement of TCS has been, it says that mid to senior level folks have been let or are being let go. AI has not impacted or has not been has resulted in this round of job cuts that TCS has done. I would tend to believe that because AI typically, at least as far as things are concerned right now, have been impacting the lower level jobs, the entry level jobs, not the mid to senior level jobs. Maybe once agentic AI picks up steam and becomes a predominant part of the work that Indian IT companies do, then maybe that could be a situation. My sense is that this is probably, and this is just a guess, there is a market share shift that's happening. The predominant theme, if you seen what the last quarter's calls have indicated, has been vendor consolidation and efficiency. And my sense is that TCS has been at the negative end of the vendor consolidation, and probably there are people who are kind of being released and who are not being are not redeployable, which is the statement that TCS has made. Interestingly, TCS is not the first company to make this kind of a decision. Just 15 days back, HCL Tech said that they're going to do a people plus facilities restructuring, which had to do with skills mismatch and location mismatch. So that didn't catch the media's attention very much, but it's very similar to what TCS has done now.
Girish, according to you, what kind of roles are most at risk in this AI-led shift in the IT industry?
See, right now, I think the entry-level jobs are jobs which involve BPO-related work, contact center work, customer experience-related work, testing work. Those are the kind of jobs I think are low-level coding work. I think those are the kind of jobs which will be at risk under the AI setup. But if there is a market share shift from one vendor to another vendor, and there is a fear that vendors can't go and self-cannibalize themselves, and that typically happens with a large company with a very large revenue base, and there is a fear that that revenue is going to get compressed because if you go and self-cannibalize yourself, that becomes a challenge for revenue growth. So that typically tends to be a problem more for the larger companies and less so for the smaller companies. So I think a TCS, Accenture, an Infosys, or a HCL Tech, or Capgemini, or Cognizant would be probably under much more pressure from this phenomenon that we're kind of going through right now.
So Ganesh, 3 years out, What kind of revenue growth would the industry be seeing at? And do you think we will see a headcount increase 3 years out now for the IT industry as a whole or for the large cap IT companies?
So my take on revenue growth for the industry has been that unlike a lot of other peers of mine, I think we will probably shift gears down to a mid-single digit or slightly lower than that kind of sustainable rate of growth, because the industry has grown and become a fairly large. It's become fairly large. So if you look at FY25, you look at the top 6 Indian players, the revenue that they generated is about $85 billion. 10 years back, that number was 42 billion. Okay, so from 42 billion to 85 billion is roughly about a 7% CAGR. And obviously, you saw the pandemic-related compressed transformation phase when I think the industry grew by about 15% CAGR for a couple of years. But prior to that, we grew by just about 6.5–7% growth. So on a larger base, my sense is that we will probably grow in the 4–5% territory. So you will have to probably pick and choose what you want to invest in, depending on whether that particular player is gaining market share. Yes, the TAM is very large, and it's probably going to be larger. The way to look at how to invest in the sector is to pick up stocks which are at reasonable valuations and can grow at maybe 2x the rate of growth of the tier 1 players.
So in that case, Girish, considering this development that has happened and the results that have come in as well, which for the lack of a better word have flattered to deceive this time around, what is your sectoral call on these Indian IT companies? Any top picks that you would like to recommend?
So we've been underweight the sector for a fairly long period of time, precisely because of this. I think we have believed that growth is going to disappoint. And until recently, I think valuations were also fairly rich and seemed unsustainable for the kind of rate of growth that was kind of coming through. We don't have any bias on the sector right now, but relatively, I would probably think that the tier 1 stocks look a little better, but then it all depends on how FY27 is going to play out. We've had 3 years of a slowdown. We have FY26, which is virtually a write-off as we speak right now. Will FY27 be a better year, which is what I'm estimating it to be, or I think the entire street believes that it could be a mid to high single digit kind of growth year. Now, if that disappoints, then we could potentially see, another year where not only will revenue growth be slower, I think there could be serious margin pressure related issues that may come up. Because in the last 3 years, we've run multiple cost management programs, your Project Fortius, Project Maximus, Fit for the Future, and a lot of other programs to control costs and maintain margins. I think we've kind of, the low-hanging fruit have been eaten up in one sense. I think going into a 4th year of a slowdown, we will have problems with margins.
Oh, that's well explained. Ganesh, would you agree with Girish that we could be in for a low to mid-single digit kind of a growth period for the Indian IT industry, or at least till revenue monetization kicks in, say from AI and all the new applications which will emerge? It will take some time. So till then, we're in for this middling kind of a growth, and also about the kind of pyramid structure, because up until now, the Indian IT industry enjoyed this pyramid structure where we hired a lot of freshers, entry level, but now those jobs are getting cannibalized by AI. So what would be the new structure that Indian IT will adopt?
See, both great questions. And in response to your first one, see, there will not be a reduction of manpower employed in the IT industry because a lot of them will start in startups. And there could be, to answer the question, what Girish said is absolutely right. That if you look at the traditional IT services players, yes, you are likely to see maybe a mid to high single-digit growth. Primarily because I think, I've been on the board of State Bank of India for many years, plus, of course, helping Bajaj FinServ. So all of them are now using startups very aggressively. So it's not just one large company or one mid-sized company, but it's a kind of sandbox of multiple companies. So in that context, yes, if you look at one company, it will not grow that much, or maybe it'll be muted. But at the same time, if you look at the industry, I think there's opportunities for enough people. So from a people perspective, I wouldn't say there's much to worry about. You have to be nimble, you have to learn new ideas all the time, but you'll be employable without a doubt. And to answer your pyramid structure, absolutely. The classical pyramid is in Jurassic Park. So you will see that a lot of agentic AI will come in. You'll have to redesign your entire organization structure to suit what AI will do and what we should do to enable AI beyond that. And that's the clear future.
Okay, we've got one more veteran voice joining in into the discussion. CP Gurnani, co-founder and vice chairman at ENEOS, is now with us. He was formerly the CEO and MD of Tech Mahindra, and he ran the company for more than 2 decades at the top. CP, thank you for joining in. Now, you've seen multiple tech cycles, right? You've seen the industry evolve over a decade, and this is now a new era that we've entered into. The fear is that we're in for aggressive headcount optimization, recalibration, cuts, whatever you would want to call it. Would you agree? How would you expect the headcount to play out for Indian IT?
I think the focus on the SHOLAY dialogue, KITNE AADMI the, or headcount based judging the IT industry, I think, thank God that period will be over. I think all of us will have to rewire ourselves to start looking at output and outcome-based business models, outcome-based pricing, and more importantly, looking at what it does for the business or what it does for customer instead of looking at IT and systems in isolation. So I'm actually quite excited because we have a chance to, we means Indian IT industry has a chance to prove that they will build platforms, they will accelerate innovation, and they will rule the world with focusing on the application cycle.
Okay. Mr. Gurnani, yes, the industry is excited. You are looking at fresh aspects in the industry as well. But about the job cuts, because there's been a lot of fear, and you have been a veteran, as Reema as well pointed out, and all of us know that. So as per you, what kind of jobs could be at risk because of this AI-led shift that we are seeing? Earlier, it was just freshers. Do you think it will slowly creep up to the other levels as well?
I think we always tend to take the extreme positions. My feeling is it is humanization of AI, and the humanization of AI genuinely means is while there will be routine jobs which will get cut, but at the same time the new jobs will get created. I mean, even today, if you go back and look at each company's job openings, you would realize that the number of job openings over the previous year has only increased. That means I need more AI engineers, I need more data scientists, I need more prompt engineering people, and I need people who can collapse a few functions of an organization. There's no point in having an HR organization. I mean, ultimately it will become, how do I serve my employee? And that means it is a data-centric organization with a human touch.
So, Mr. Gurnani, since you brought up Sholay, I would want to bring up one more dialogue from the film. It says, "Jo dar gaya, samjho mar gaya." Has the Indian IT industry now been driven to a point where the fittest will survive and the fastest to adapt will be the fastest to grow?
I would actually like to believe is that if we look at how a lot of new companies have reoriented themselves, which includes IONOS, we are definitely building a co-creation with our clients, creating platforms, and as I said, the traditional way of looking at verticals, I mean, it is no longer like when you go to an airport, do you consider it to be an airport, or do you consider it to be a real estate, or do you consider it as a retail store? So my point of view is that the advent of technology has only collapsed industries. So I do believe that Indian IT companies will also re-emerge, and they may come up as marketing as a service, they may come up as data as a service, or a quality as a service, but ultimately what we are going to look at is a shape, and the way the companies are presented, it will change over the next 5 years.
Gentlemen, we could go on, but we're out of time. Thank you, all three of you, for joining in, Mr. Gurnani, Mr. Natarajan, and Mr. Pai, for joining in into this discussion.